Hello crypto enthusiasts, and welcome to the FinShark Updates, where the latest crypto news and updates are brought to you. Bitcoin is finally witnessing an uptrend this week, with its price stabilizing over the $31,000 level for the past 2 days. The first signs of a thaw emerge as the crypto winter creeps into June. Some investors are now betting that Bitcoin is bottoming out, judging by the money heading into listed cryptocurrency funds, which represent just a slice of the market yet are popular among institutional and retail players alike. Overall flows into such funds turned positive last month, with a weekly average inflow of $66.5 million, a reversal from a dismal April when they saw an average weekly outflow of $49.6 million, according to data provider CryptoCompare. So, what is the real reason behind the Bitcoin crash? The real reason behind the Bitcoin crash: cryptocurrency is being called the future of money. Last year, the crypto market saw new heights and gained more legitimacy. But the recent crash, which wiped out more than $1 trillion worth of digital money in the last 6 months, has posed serious questions about investing in cryptocurrencies. In November 2021, Bitcoin and Ethereum, two of the most popular and supposedly stable cryptocurrencies, reached their all-time highs. The crash. The crypto market was worth $3 trillion in November, but now it's worth just $1.28 trillion. According to Reuters, Bitcoin, the world's largest cryptocurrency, crashed as low as $25,401 on May 12, its lowest value since December 2020. Bitcoin is currently bouncing around $30,000. The Luna and Terra USD crash also left a substantial negative impact on the crypto market. According to NBC News, Tether, a cryptocurrency known for its stable value, needed an urgent rescue last week. Terra USD's market value has dropped from about $19 billion earlier this year to $1.3 billion. Last week, Terra USD saw a massive meltdown, falling below its $1 value. According to the Wall Street Journal, the crash put pressure on the price of Bitcoin and other cryptocurrencies and wiped the value of Terra USD's sister currency, Luna. Luna is used as collateral against Terra USD to keep it linked to $1. Since January, other cryptocurrencies like XRP have dropped by 34%, Solana is down by 38%, Cardano has dropped by 35%, Stellar by 29%, and Avalanche has fallen by 39%, according to the Mint. Who owns the most Bitcoin? Satoshi Nakamoto, Bitcoin's anonymous creator, was also the first miner. Satoshi has reportedly mined over 22,000 blocks and earned over 1 million Bitcoin in total block rewards for his efforts. As a result, Satoshi is said to have the most significant Bitcoin cache, with over 1 million BTC worth almost $4.5 billion today. 3 Bitcoin addresses, excluding Satoshi, each have more than 100,000 Bitcoin. Binance, Bitfinex, and another address whose identity is unknown are the 3 addresses with the most Bitcoin. These 3 addresses together hold about 575,000 Bitcoins. Companies can leverage corporate funds, known as treasuries, to purchase Bitcoin. This method, used by firms such as MicroStrategy, Tesla, and Galaxy Digital Holdings, protects savings against inflation and negative yield bonds. Large firms that issue low-interest corporate bonds can produce highly cheap debt and use the earnings to acquire Bitcoin. This method is similar to purchasing on margin or leveraging. In principle, if the value of the dollar declines due to inflation and Bitcoin continues to store value, paying down fiat debt will necessitate less Bitcoin. Here are the key takeaways about who owns the most Bitcoin. Private keys are in charge of everything in Bitcoin. The owner of a private key owns the Bitcoin that the critical controls. Even with huge assets, Bitcoin ownership does not guarantee influence over the Bitcoin network. The top 3 Bitcoin addresses combined hold about 575,000 BTC. MicroStrategy has the most Bitcoin of any publicly listed company. How many Bitcoins are there in circulation now? Currently, there are 19,060,975 Bitcoins in circulation. This value changes every 10 minutes as new blocks are mined. At the moment, each new block contributes 6.25 Bitcoins to the ecosystem. How many Bitcoins will there ever be? The total number of Bitcoins that can ever exist is 21 million. How many Bitcoins are still available for mining? There are now 1,939,025.0 Bitcoins available for mining. You may, however, always purchase Bitcoins from existing holders on exchanges with the P2P method. How many Bitcoins have gone missing? There is no exact answer. According to one recent estimate, around 3.4 million Bitcoins are gone permanently. It is hard to determine the correct amount since a lost Bitcoin appears on the blockchain the same as a Bitcoin in circulation. We can make some estimates based on how long a Bitcoin has been in an unmoved address. We've also heard of wallets where the owner lost the private key. Should you invest in Bitcoin? Bitcoin is the world's most traded and popular cryptocurrency. As of March 11th, Bitcoin was worth around $750 billion in a crypto market worth close to $2 trillion. The price of Bitcoin is known for its volatility. After humble beginnings in 2009, the coin finally exceeded $1,000 in 2017, then took a steep but rough journey to an all-time high of about $69,000 in November 2021. It then fell as low as $35,000 in January 2022, and then it was valued at under $30,000 for the first time in a long time in May 2022. And now, it's at the current market value of around $31,000 and continuing to rise. This volatility, however, has not prevented Bitcoin bulls. A Goldman Sachs analyst predicted that Bitcoin might reach $100,000 if accepted as a gold alternative in January. While Bitcoin does not yet have the same credibility as gold as a store of value, the crypto king is getting popular and may have a place in your investment portfolio depending on your goals and risk tolerance. If you're considering investing in Bitcoin, keep the following points in mind. What role does Bitcoin play in your investment portfolio? The risks of cryptocurrency ownership. Bitcoin's future. As more people feel comfortable holding crypto assets and trading in the crypto market, the cryptocurrency market cap will grow, the crypto economy will expand, and Bitcoin's visibility will increase, according to the token's advocates. As Bitcoin awareness grows, many traders and financial experts have concluded that now is the moment to include Bitcoin in their investment portfolios. Ron Levi, CEO and co-founder of the crypto company. Bitcoin is rapidly considered a store of wealth or an asset with long-term worth. Gold has historically held that status and continues to do so, but Bitcoin has challenged it, leading some observers to refer to it as digital gold. The blockchain consumes a lot of energy, and it's one of the significant concerns about the Bitcoin network, which employs proof-of-work consensus. When more Bitcoin investors join the platform, there is additional congestion, and the costs related to each transaction can add up. However, there is an alternative consensus process known as proof of stake, which rival blockchain Ethereum plans to implement in 2022. If Bitcoin adopts the proof of stake, it may reduce some of the network's issues. The logic behind the proof of stake process is similar to that of proof of work. However, it is more energy efficient and scalable. This modification may improve the Bitcoin blockchain network's performance and promote greater Bitcoin investor engagement. Bitcoin's future will almost certainly be more closely regulated. In March, President Joe Biden signed an executive order on cryptocurrency regulation to provide additional clarity and transparency to U.S. policy regarding digital assets. Advocates for Bitcoin's wider adoption see this as a necessary step in educating the public about Bitcoin and cryptography's role in the global financial system. Can Bitcoin reach 100K? According to Antony Trenchev, CEO of crypto financing business Nexo, Bitcoin might reach $100,000 within a year. He predicted that Bitcoin would fall in sync with traditional financial markets when the Federal Reserve unwinds its massive stimulus strategy. However, he believes that a collapse in stocks would eventually force the Fed to start easing. The crypto industry faces obstacles as the global legal situation remains fragmented and the digital currency remains volatile. Crypto enthusiasts claim that the market has matured and that there is enough liquidity that major Wall Street firms such as Jump Trading and Jane Street are migrating to digital assets. Meanwhile, crypto whales like Do Kwon, co-founder of blockchain firm Terra Labs, buying up Bitcoin with the expectation that it will become a future reserve currency. However, the market is facing significant challenges. The new international regulations are still fragmented, and the cryptocurrency market remains volatile. Bitcoin, in particular, remains highly connected with the stock market, particularly the Nasdaq index. While stocks remain volatile, so may Bitcoin as well. Wrapping up, it remains to be seen whether the crypto crash continues. Some worry that, as more investors fear, the situation will escalate. They predict that, despite its day-to-day instability, Bitcoin will maintain its zoomed-out growth trend over the last decade. However, when Bitcoin dropped below $30,000, believers bought the dip or joined the market at a lower price. Thank you for taking the time to watch this video. Don't forget to smash the like button and subscribe for more crypto, Web3, NFT, and finance videos.